In 1947, when India-Pakistan partition happened, hordes of Hindus and Muslims grabbed whatever little they could, dragged their children along, and boarded buses, trucks, and trains. Those who held their assets in land and in business pretty much left empty-handed. But those who held their assets in gold used the gold to survive in the new land. Gold was their savior. The rich people hold gold and yield power. Even today, the young girls in India are married off with a lot of gold. Do you know why? So that she would be respected in her marital home. And if things don't work well, gold was always the backup plan. That way, gold has been part of our history, it's been part of our life, it's been part of our upbringing. No wonder we can't look beyond. The glitters make it all worthwhile. Somewhere down the lane, the government started using gold as a storehouse of value. Gold-based currencies came about. That was still okay and tolerable. The trouble really started when paper gold or gold-based bonds started coming in vogue. And ever since I've been wondering, where are the glitters? Now gold stopped being a storehouse of value, it stopped being a backup plan or a savior. Now it's morphed itself into an investment. And when it's an investment, smart people like us don't make the decision of putting our money in there without carefully and rationally analyzing it as an investment. So in this video, we're going to do exactly that. We are going to analyze gold as an investment option basis our three usual filters: returns, risk, and the cost, taxes, and convenience of holding it. Let's look at returns from gold. Any asset, if it has to become more expensive or give you good returns, has to have the inherent capability to grow and become something really big. An asset can become big because for two reasons. Number one, it can create tremendous value and become more expensive, or it can become a scarce commodity and hence more expensive. Gold, when it's used to make jewelry, creates social standing and snob value. And when it's used for engineering, for medicines, then also it creates tremendous value. But when it's kept in the vault, the idea is that it will become a scarce commodity and hence more expensive. Now, whether or not an asset is going to become scarce is a function of demand and supply. It's true that mining gold from under the ground is getting more and more difficult. So the supply will be impacted. But 75% of the gold sold in the market is recycled gold. So I guess there's enough to go around. As to demand for gold, it's not just the festival season demand or the wedding season demand that really makes a big impact. Demand for gold is a function of finding alternative investments for your money. The gold is considered a safe investment when we're looking at some geopolitical tensions. For example, if we think the world is going to go into war, then governments put money in gold. When dollar prices crash for some reason, governments put money in gold. Now, as to war, what Mr. Trump will do or what Mr. Kim Jong-un would do is anybody's guess. But I think what we definitely know is that history repeats itself. We can, in the last 35 years, see how the prices of gold has moved. Between 1981 and 91, gold prices doubled. Between 92 and 2002, gold prices were pretty much where they were. They were very stagnant. Between 2003 and 2013, gold prices multiplied 5 times. What was about 4,500, 5,000 rupees for 10 grams of gold went up to 25,000, 28,000 for 10 grams of gold in 2013. Now in 2017, gold is sold for something like 29,200 for 10 grams, which is the price that was the price in 2012 as well. So in 5 years, the price of gold has not gone anywhere. Looks like, just like my hair, gold also seems to have its good days and bad days. But over the last 35 years, the average returns from gold has been 8.48%. Just about the returns from fixed deposits. Now I'm going to leave it to you to judge whether that's good enough or not. Is gold a risky investment? I think we should ask this question to someone who bought gold in August of 2013 when gold was trading at 35,000 rupees for 10 grams. I wonder how they'd be feeling now in 2017 when gold is trading at 29,200 for 10 grams. Apart from losing capital value, gold also attracts unnecessary attention. Holding or wearing gold makes you vulnerable. The history of this country is replete with a lot of examples of how foreign invaders came and plundered our country for just the gold in it. I don't know how people think gold is not risky. Next, let's look at convenience, tax, and the ease of holding gold. In terms of liquidity, gold is a very liquid investment, both in physical form and in paper form. Thumbs up to it. In terms of taxability, you don't get any tax advantage because you're holding your asset in gold. On the other hand, it's a capital asset and attracts capital gains tax, and it also attracts wealth tax. My problem with gold comes with the trouble of holding the asset. You got to have a locker, and you have to have 2 sets of keys. You have to pay for the locker, and then you run the risk of theft and robbery if you keep it at home. And if you're going to recycle old gold, the cost of depreciation and making charges can just kill you. See, gold, the glitters make for very fun holding, no doubt about it. If you want to be showing your love, buy gold. Recently I was meeting a jeweler who said they're losing a lot of sale to iPhones. Notwithstanding, I think gold makes for amazing gifts. I wouldn't mind a few pieces myself. Go ahead and buy gold if you want to gift someone, show your love, or just want to wear it and enjoy it. But if you want to be buying gold as an investment, think twice about it. It's a very suboptimal choice.